Great to be back at the Blockchain for Europe Summit. And by the way, congrats to the entire Blockchain for Europe team. It's amazing what this has become in so short. Today we want to discuss stablecoins, specifically Euro stablecoins. I will be the moderator, but Robert asked me to be quite an opinionated moderator, so I'll be like panelist / moderator. And I thought the best way to structure this panel would be to start with a stock taking. Let's look at the Euro stablecoin market, look at what's working, what might not be working, then move on into the second part, discuss what we recommend, both on the regulatory side, legislative changes, whatever, maybe business changes, strategy changes to make that market grow. And then the last part, the third part, just discuss a little bit how Euro stablecoins compare and compete with other forms of tokenized euros, be it deposits or CBDC. So with that said, I think my panelists need no further introduction. I mean, Peter Grosskopf, CTO and CEO of AllUnity, stablecoin issuer from Germany, BaFin regulated, and Jens Hachmeister, managing director at Deutsche Börse, one of the largest financial markets infrastructure providers here. So 3 Germans are standing between all of you guys and lunch. But to keep this essentially entertaining and also interactive, I wanted to start this stock taking with maybe asking all of you guys, in the last, let's say, 12 months, in 2025, who of you transacted in any fashion, bought, sold, transferred Bitcoin in 2025? So that's, I would say, the majority, maybe 2/3. Who of you transacted in any form or fashion, bought, sold, transferred with a US dollar stablecoin in 2025? Yeah, a little less, maybe 50%. And last question, who of you transacted in any fashion, bought, sold, transferred with a Euro stablecoin in 2025? So yeah, way less, maybe 10, 15, 20%. So that's a good stock taking to start with, and maybe asking that question straight to the panel. Peter, with that real world feedback in mind, what is working and not working with Euro stablecoins at the moment?
Well, so that's a... Okay, now it's working. Yeah, that's a good question, but I think it should be answered with the state of the market, because I think any one of us, and I think also the result of the quick poll here in the room also showed that stable coins are coming from the crypto world, right? So I remember me first time using a US dollar stable coin to move funds from one, let's say, overseas exchange to another overseas exchange, so that wouldn't have worked using the traditional banking rails for tons of reasons, and I think the product market fit for stable coins, especially the dollar denominated ones, is in the crypto world. And I personally believe that for Euro stable coins, the future is really in the non-crypto world, because we see that and also various use cases also around Stripe and other financial players adopting stable coins. So stable coins are becoming a technology platform for building financial services of any kind, and it's not only for crypto-related businesses, and therefore I really believe that the more stablecoins become a technology platform for building financial services, then there will also be the need for other currencies than the US dollar, and I think that's when the Euro stablecoins are going to shine. But I think that's the response to the question, because or the answer to the question. Because I think at the moment we don't see too many real-world use cases for using Euro stablecoins, and I think that's a bit a problem.
So do you think that growth and traction will be primarily in these non-crypto related use cases in the foreseeable future?
Yeah, so I think it's very difficult to get the dollar out of the crypto world, right? Because US dollar stablecoins are very established in DeFi and also for moving funds between crypto platforms. So therefore, I think that's very difficult to get the dollar out of that. But if people are going to use, for example, also stablecoins to settle a security or to pay at a gasoline station, so then they want to do it with their local currency. And for us, it's the euro, and for Asian countries, it's their respective currencies. And I think so the more real-world adoption we have, the more we're going to see non-US dollar stablecoins.
Jens, I might have an idea where you might be going with your answer coming from Deutsche Börse, but looking at the current market, Euro stablecoins, I think roughly 600, 700 million in circulation, US dollar stablecoins over 300 billion. How does the Deutsche Börse look at this market, and where do you think, the current challenges lie for further Euro stablecoin growth?
Yeah, thank you. And good to be recognized as a new face, given that it's my third time at Blockchain for Finance, but still, I'm happy to be here. And let me probably add to what Peter said. And I believe that, first of all, your first question was like, what could be better? I think a lot of things are going in an absolute right direction. We have a regulation. It's a good thing. We have kind of a stablecoin provider and issuer. So if you look around Europe, then we have like, according to my knowledge, we have like 25 stable coins and we have 17 providers, which is already, I think, a good kind of cohort to begin with. And to Peter's point, I would really say that probably it will be super hard to re-win and reconquer the kind of crypto market to, and Peter has talked about dollar dominance, so to say, US dollar dominance. Not sure whether we really want to go into this field. But I mean, us coming from securities markets, obviously, we look at stable coins at kind of one potential way to be a kind of source of collateral. Cash and non-cash collateral, obviously all subject to regulatory approvals in the future. But this is one major element where we believe stablecoins can play a role. And then obviously, if you realize that securities markets live from delivery versus payment, so the securities leg and the cash leg, then obviously one of the highly and often debated cash legs are CBDCs. But in our view, I always keep saying we are operating two types of fuels. One is central bank money and the other one is commercial bank money. And if you are looking for kind of equivalents of commercial bank money, then stable coins in its next generation might be a viable and sound way to act as an equivalent of commercial bank money in our ecosystem. And this is why, and I don't know if you have seen it, we have announced certain strategic partnerships with AllUnity, with SG Forge and with Circle. And people sometimes ask, why have you picked, first of all, why did you pick those? I mean, obviously, we love to team up with regulated players in the market. This is the first thing. The second thing is we want to provide choice to our market participant. And the third thing is we want to obviously team up with players in the market where we see the potential to really elevate and integrate them along the wider part of our ecosystem and infrastructure.
Thank you. So that was, the first part, the stock taking. And by the way, I largely agree with your assessments. I would maybe add one caveat also from Circle's perspective and from issuing a Euro stablecoin ourselves, Euro C, is I do think the larger growth will come from capital markets trading, payments, etc. But still, in crypto, I mean, crypto is quite a large market, right? If you look at 3 trillion market cap out there, billions of volumes every day. And what we are starting to see, I mean, it's nascent, but it's promising, is, for example, the usage of Euro stablecoins in DeFi lending, where holders can get a certain rate that is way above just the ECB standard rate or the savings rate that you can get in your bank account. And I think that will only increase in the future, that discrepancy between what you can earn on your fintech app, on your banking savings account, and DeFi, for example. Or on the trading side, I mean, if you trade with euros, and I think most retail consumers trade with euros on exchanges, it's impossible to get fiat money in and out on weekends, right, or after banking closing hours. And that sometimes even leads, and we're seeing that, to arbitrage and like to price discrepancies between euro pairs and stablecoin pairs. And so I do think that ultimately those fiat euro legs will be shifted over to euro stablecoins. But that just as a caveat. Do you want to add anything?
Yeah, so as you were talking about the use cases of stablecoins, I think one important use case is also the treasury. So as we see, for example, with people in Argentina or Turkey holding stablecoins, as for example, US dollar stablecoin is more stable than their governmental currency. And on that narrative, I also see some change, because also we know the political instability in the US also led into kind of losing worth, like that the dollar is losing value over time, especially in comparison to the euro. And eventually people are also starting to realize across the globe that the euro is eventually the better money to keep your wealth and to park it in your treasury, and eventually that can also become a narrative for euro stablecoin adoption across the globe.
If I may, and you mentioned an element which I would kind of summarize in bridging the gap between traditional finance and the kind of, in my view, even DeFi networks. And this is exactly to your point where stablecoins can play a pivotal role. I think the other thing, looking at Circle, then probably is the question like, how strong can payment networks on DLT really being built out? I mean, probably mentioning ARC, etc. So let's wait and see if this is then really the next level to stablecoin adoption as well globally. And then the question, in my view, probably, if I may, another element is that if you look at stablecoin providers, be it Circle or be it AllUnity, the idea to own the product and to deploy it in very different, I would say on very different rails, in my view, is this kind of next idea where traditional finance should take a close look how and what we can learn and derive for our market infrastructure going forward and for the transition of market infrastructure, or traditional market infrastructure into the digital age.
Yeah, 100%. So, I mean, big takeaway. I think the panel, at least, I hope you guys are too. As we're bullish on Euro stablecoins, and there's a lot of avenues for growth. How can we further catalyze this growth? You know, that's the next question. Is there any barriers that we have to remove? Just ahead of Christmas, we're in Brussels. What's your wish list, Peter? If you can, you know, just shout out 1, 2, 3 things from a regulatory point of view that you might, you know, have in mind.
Well, so I think we have the MiCA in place already, so there is no further rule book needed for Euro stablecoins.
That could also be a wish, right? Don't do anything, just.
But of course, also as probably the whole room also knows, with the introduction of MiCA, it wasn't done, right? So you had all the level 2 discussions, and also I think looking back on the year 2025, so there's been a lot of regulatory discussion around stablecoins. So the PSD3 debate and CASP's eventually needing like a PSP license, and then the multi-issuance topic. I think also a really hot discussed topic, where I must also say that so how the German would say, zwei Herzen in der Brust haben, to have 2 hearts in my chest, because on the one hand, of course, we all love blockchain because of its global nature, and you can move tokens across the globe and use it to move value across the globe. On the other hand, you have the different local regulatory regime, so like us with the MiCA, Genius, and probably further future rule books across the globe, and in the end, moving a regulated asset across the globe isn't that easy. And I think this shows the multi-issuance debate. I'm pretty sure also you, Patrick, have an opinion on that. So where I must really say it's very difficult to come up with the optimal solution, because on the one hand you want to protect the local issuers and the local companies, so also like AllUnity, but on the other hand, you want to keep the global nature of a stablecoin to be sent easily across the globe.
Yeah, indeed. I mean, maybe my 2 cents on that before Jens, you can chime in as well. I think basically that's part of the reason why we're having this debate is because MiCA was first, right? It was already adopted in 2023. My guess is if MiCA was adopted today, they would probably formalize or introduce some kind of equivalence or recognition framework where the EU looks at foreign jurisdictions, and if it's broadly comparable rules and requirements, they would kind of accept that token to be circulated here. MiCA picked a different path, right? It was first, so it requires foreign issuers to issue out of Europe in that multi-issuance structure. That's the only current pathway for those issuers. And I think it's key for the industry both in crypto and also traditional financial markets, that the European market maintains its open nature to power these cross-border payments, to power crypto market liquidity, and not kind of try and shut off and insulate the European market from the rest of the world. But obviously on the way there's a technical discussion to be had around how should that be managed, what are the safeguards that should be put into place. Probably a technical discussion that would kind of take longer than we have today, but I think that's probably the way forward. Jens, one question I wanted to ask you on this regulatory chapter is, for the use of stablecoins in capital markets, let's say at Deutsche Börse, hopefully in the future for settling tokenized stocks and bonds, do you see anything that's missing here from a regulatory point of view?
Good question. I want to have, and also sure. if I may, let me add my 2 cents on multi-issuance, because I think it's important. I do not believe clearly that kind of banning multi-issuance is the way forward for Europe. Clearly not. It is, in my view, the way forward is to come up with a compelling and competitive and strong offering out of Europe. Yeah, and we've talked about European stablecoins earlier. So really to really build the counter offer to other stablecoins globally and stablecoin offerings. And in my view, it is rather the combination of each and every jurisdiction to ensure that you have high quality issuers of stablecoins, which are supervised, etc. And the second thing is that that the part of the reserve fund of multi-issued stablecoins are rooted in the jurisdiction where a part of the stablecoin is issued. In my view, this is less a question finally of technology, but about a question of financial stability and global financial stability. Yesterday I was at a round table where exactly this was a topic, then leading into sovereignty, etc., etc. But to your question, what I think, if we look at security settlement systems, and the regulation around those, be it the pilot regime or CSDR, we need to prepare the regulation to be open enough to embrace all these kind of different settlement units going forward. And the second, to embrace different types of digital assets, not only security. So if you look at regulation today, it is, in my view, sometimes a bit too narrow, just looking at securities and traditional fiat rails, which is central bank money and commercial bank money. There we need to open up for incumbent players like us, but as well then for the new entrants, be it those who operate under the pilot regime or other global fintechs here.
Makes sense. And if I may add or stress just one point that Peter already highlighted, that if I had a wish for the next few months for Euro stablecoins, I feel like one thing that is underestimated in the market is the amount of challenge that the duplicative requirements stemming from the PSD would bring to the market. So just for those who don't have that in mind, currently it's being debated both at the EBA and ESMA level, but also at the legislative level with the co-legislators, to what extent the payment service directive should also apply to services based on e-money tokens. And the problem here is that e-money tokens are deemed to be e-money. But if you apply the same exact payment services requirements on all e-money token-based services, essentially businesses, CASPs, users in the future, if they want to use those stablecoins in Europe, they will have to comply with both MiCA, for example, custody and transfer services, but also the PSD and the payments-related requirements for essentially the exact same services. And I think one goal of MiCA, and that I think is undeniable from the beginning, was to create that one framework that is separate from existing frameworks and avoid duplication of rules. And so I'm hopeful that we can, sort this out and create the exemptions that are necessarily, the transition deadlines that are necessary to have this market grow in the meantime. But since I'm seeing that time is running, and by the way, Tommaso, I don't know, I feel like we have a little bit more time, right? Because we started way later. I feel like this is being unfair here. No, I'm just kidding. We'll keep it short, but maybe last chapter or last topic before we dive into some rapid fire questions. Tokenized euro writ large. There are euro stablecoins. There are deposits there are the digital euro from the European Central Bank. And I personally sometimes feel like we're talking too much about potential competition here. But I'm curious to hear to what extent, for example, Peter, from one of the operators in the market, you see these things as being complementary, you see the narrative going in the right or wrong direction. How do you think about this plethora of tokenized euros out there?
Yeah, so that's also a good question. So the point is that you, from also reading, let's say, all the statements from EBA and ECB and so on, you get the impression that stablecoins are not really the favorable money regime that we have at the moment. So there's always being talked about the digital euro, and it's almost in any presentation. And so also I think any one of us also sits oftentimes in panels also together with people from Bundesbank and or at least on stage also with people promoting the digital euro. And so you really get the impression that this is going to be the only form of digital money in the future. I think also a lot of people here in the room might also have skepticism whether the digital euro is really tackling a market need. So I think there's also a large debate about that. But I truly believe that we already saw in the past multiple forms of digital money. So there's like e-money, there's tokenized e-money, there's deposits, there's tokenized deposits, deposit tokens, retail CBDC, then also the wholesale CBDC project. Probably you also going to say a bit about it. And in the end, all of these different forms of money are going to address a special vertical in the market, and all of these forms of digital money are needed. And also the digital euro is eventually coming in a couple of years. The stablecoins are here already. And so we see the markets for US dollar stablecoins also picking up. So therefore, I think we as Europe really need to see that opportunity that we have a stablecoin regime, actually a really stable one also with the liquidity reserves, so that we need to hold as an e-money issuer. So I really believe that we need to also push the digital agenda forward by really supporting all the different forms of digital money.
Yeah, do you feel like that public discourse and focus on the central bank digital euro is holding private issuers back to some extent, just potentially not having enough visibility in the market and narrative around it compared to other jurisdictions?
Well, so I really think the digital euro, like the introduction of it, is going to be really difficult because at least in all the panels I'm sitting, where it's also people from banks, I haven't talked to a person working in a bank who celebrated about the digital euro and was highly supporting it. And I think that already shows a problem because the digital euro is going to be introduced by the banks. And so the ECB also needs the support of the banks. And I think if the last mile already is skeptical about it, I think that's a pretty bad sign 5 years before going live.
Jens, what's your favorite form of tokenized euro?
Yeah, really not much to add to what Peter said. In one sense, really, we need very, very different shapes and form of money. And Peter Kersten said it earlier this morning. I mean, stablecoins, even if we have whatever 300 billion right now, all in all, I mean, we need, from an institutional point of view, we really need trillions. So to give you an idea, every day we have our turnover and settlement is multiple times the GDP of Luxembourg every day in Clearstream. So meaning a couple of billions all nice, couple of trillions would be needed, and we are settling today. We are settling in US dollar, in sterling, in yen, obviously in euro. Right, and we need all of those. So therefore, it is not the question: do we need? So we need the wholesale CBDC in euro. We need wholesale CBDCs in other currencies, and we need stable coins in multiple currencies at scale. Because otherwise, we'll never adopt to the use cases we mentioned earlier, whether it is the settlement currency, whether it is collateral management, etc., etc. So we need growth. We need growth and super scalable providers of these private and the public forms of digital money.
Agreed. Thank you, Jens. Thank you, Peter. I want to close with a few rapid-fire questions, if you're fine with it. You can't escape, so you have to answer. and then we can free everyone for lunch. So let us start. If we meet 1 year from now, so end of 2026, right now Euro stablecoin market cap is roughly, let's say, 600, 700 million. Where are we in 2026 at the end? Peter, what do you think?
I would say 2 to 3 billion.
My wish would be that we rather move towards 10 billion, if possible.
All right, there's a lot of bullishness over here. What do you think will be the Euro stablecoin market share versus compared of the overall stablecoin market share? Right now, we're roughly at 0.5%, which is obviously way too low, so we're trying to change that. Where are we next year?
Well, I think it will just simply grow. I think I would say like 10x.
Yeah, in single digits still. To give you an idea, throughout the last 30 days, the overall market cap of European stablecoins grew by 0.65%, which is not too much.
It's something already. So let's build on that. And final 2 questions. Euro stablecoins can be launched by either credit institutions or e-money institutions, right? Those are the 2 regulated forms under MiCA. Who will be more successful, Peter? Credit institutions or e-money institutions launching Euro stablecoins? What do you think?
So I'm definitely in for the e-money institutions.
For me, the success is defined, and we talked about this earlier, Peter and I, about the balance sheet. You need to collect a kind of huge balance sheet in order to provide scale. And therefore the question is not which animal.
But also just to go against the rapid fire question idea, the long answer. So I think especially for banks in Europe, I think the use case for stablecoins isn't that visible, because in the end you can move money also with the SEPA system, and moving funds between bank customers is pretty easy using SEPA. But I think for the banks it's going to start with international remittance. I think that's where stablecoins become interesting for them. So therefore, I really believe it will, especially for Europe, it will become a play for EMIs.
All right. Last question. Looking further into the future, it's the year 2030. The digital euro has been launched by the ECB a year ago. What is larger in market cap? The digital euro from the ECB or the largest euro stablecoin in circulation during the year 2030?
Digital retail euro?
Yes.
Okay.
Definitely the stablecoins, and also the long answer for that is also as you with Circle also shaped the wording of internet money, and I think stablecoins in the end with ERC20 tokens being open programmable money, so you can send it to any wallet address. The market infrastructure is there already. So as this is kind of open source money, you can have much faster adoption with it. And so therefore, I really believe that it will definitely outperform the development against the digital euro.
Not sure. Maybe on par. It really depends on the use case, in my view. I think you'll see stablecoin lovers and you'll see use cases with stablecoins, and then you might see use cases for digital retail euro as well. So, not sure.
All right. So, agree with the answers. You both violated the rules of short answers, but great job. You both won the rapid fire debate. Thanks everyone for listening, and see you around. Thanks, Tommaso, and talk to you later.
Thank you.